Well, here's a pleasant surprise. We've got both Geoff Benic, CEO of Aleafia, and Nick Dean, CEO of Emblem, in the house to discuss the recent combination of their two companies in an all-stock transaction. Gentlemen, welcome.
Thank you.
Okay, so, sorry, got a frog in my throat. The first thing I want to point to here is that there were some discussions even just a couple of months ago where Emblem was contemplating being sold for $200+ million, if I'm not mistaken. Is that true?
That is not true.
Okay.
So look, we've had a number of discussions over the last year with different parties about bringing the company together or strategic partnerships.
Right.
But there was not a combination in play officially anytime throughout the year.
Okay, so investors on both sides want to know that they're getting a good deal here.
Absolutely.
So, I mean, I'm just going to play devil's advocate for the shareholders of Emblem because at a 27% premium, let's call it, so investors who bought into the company like even 6 months ago are not exactly going to be happy with that.
Yeah, so I think, you know, we've been watching the forums this morning and we've seen some feedback from shareholders and analysts, and it's a similar question. And I think what we really need to focus on in this deal is the exchange ratio. So ultimately it's a 0.83 exchange ratio. For every Aleafia share, Emblem shareholders will receive that ratio. So we will see upside potential as Aleafia shares appreciate into the new year, which we expect, right? We're looking at the market right now, and there's a lot of downward pressure on the category because of tax loss selling. You know, I anticipate that in the new year, we're going to start to see that improvement again in the marketplace. As a result of that, our shareholders may actually see a more significant share price or transaction based on that exchange ratio. I think it's also important to look at the pro forma, right? Emblem shareholders are going to get 41% of a phenomenal, medically focused international cannabis company. And you know, this is going to give us a lot of horsepower to amplify our growth strategy. And there's a lot of accretive benefits and a lot of synergies.
Okay, so basically the Emblem shareholders should be happy because they're just transferring their upward rise into Aleafia shares from Emblem shares.
Correct.
Great. Well, okay, that's an awesome explanation. I'm going to keep my stock. So, Geoff, you are. How did the whole thing come together? Whose idea was it, and what was the sort of driving impetus behind it?
So I think it was collaborative. First of all, I just want to commend Nick and his team. Nick's done a phenomenal job at Emblem, and he's really transformed that business since he took it over or took responsibility as CEO. And I think that the whole Emblem brand is just really developed tremendously under Nick's leadership and his team. So I want to get that out there first and foremost. Second of all is that, you know, I've never seen an industry that was so well capitalized, that is consolidating is commoditizing so fast. So it's one of these scenarios where you've got to look for great assets that can transform your business and that are complementary to what you're doing, and you consolidate. And so I think clearly what you're seeing here is that you know, Emblem was a great opportunity, and we saw that. We saw that you know, what Nick and the team were doing there was very complementary to what we're doing. Combined 60,000 patients, 40 clinics, all medical. Some of the brands that Nick had or has in terms of capsules, oils, and the sprays, sorry. It was just a phenomenal opportunity. We just thought it was a great time to move.
Right, so now it transforms Aleafia into more of a LP, and everybody rides off into the sunset, I guess. So Aleafia, how many consultancies are there right now, clinics?
So right now we have 22, right? And with GrowWise, we now have 40 combined and 60,000 patients.
Wow.
And that's really the interesting part of it, right? Is the 60,000 patients that, you know, for the longest time have been, for whatever reason, not being able to buy medicine because of, you know, the shortage of supply. And so we're committed to our patients, as is Nick and Emblem. And we just think it's a tremendous opportunity to make sure that our patients are always in stock for medicine that they need.
Okay. Right? Does Emblem have the capacity right now to supply 60,000 patients?
We do. So I think the way that we look at this is we see this as probably the biggest benefit of the combination is that Aleafia has seen over 60,000 patient encounters. We then combine their incredible capability of bringing patients into their clinics with our GrowWise capability, where we're great at education and converting those into Emblem patients. So we see really a strong vertical integration down the pipe, straight from patient acquisition straight through to patient conversion and retention. As Geoff has mentioned, we have a significant product pipeline, whether it's our dried flower, oils, capsules, sprays, soon to be tablets, and so on as we continue to product innovate. So you really are able to satisfy all of those patients' needs with the product that we have on hand, and that's where we see significant benefit in terms of not only revenue, but profitability down the line relatively quickly, because these are high margin products, which you and I have talked about, right? Our oils, we're seeing an average price of about $15 per gram in recognized revenue. When you move up the value chain into capsules, into oral sprays, that number only increases. So as we continue to broaden our product innovation pipeline, we think that that's going to be an incredible opportunity for the combined company.
And I really don't want Nick to underplay the crown jewel of the deal is the 30,000 square foot new extraction facility that Nick and his team have been developing. It's a great facility. It's going to complement our outdoor grow, which we've announced that we're going to be bringing out in April, biomass that we're going to be able to extract and look for better margin opportunities downstream, as in edibles, et cetera, right?
Sure, let's talk about the outdoor grow, because that's going to be one of the first in Canada, I take it. And so essentially, are you going to be growing like a hemp variety of cannabis where it's low in THC, or are you just going to grow full-on cannabis, sativa and indica?
So we're looking at wherever we can get the best opportunity, whether it's in CBD or THC. Obviously, this will not be, typical flower that you're going to inhale, right? It's going to be more biomass that we're going to extract and create some real opportunities downstream for great margins at, because this product, the extraction will be, or the oils that we'll get out of this will be very, very low cost, much below traditional indoor and/or hybrid greenhouse grow.
Right. So we talk now about cost per gram in the 80 cents to $2 range. Do you have an idea what the cost per gram would be in an outdoor situation at this point?
So, I would say that we're probably in the 25 cents a gram range, and it's just a great opportunity.
Sure.
It really is.
Sure, okay. Well,
second mover advantage is phenomenal. You don't make the same mistakes that some of the market leaders did.
Right.
And you get to learn from them, and this clearly is that.
Okay, what's the size of the outdoor grow?
So we're going to do 30 acres,
okay.
Right? 30 acres producing about 60,000 kilograms.
Wow. That's exciting, and that's in Ontario?
Yeah, that's in Port Perry facility.
Oh, okay. Right? Well, we'll bring our cameraman by to shoot it when it's
sure.
dry.
Good idea.
Sure.
Okay, well, that's great. It sounds like a great transaction. I'm excited for you both. Thanks for joining us today.
Yeah, thanks for having us.
James.